Okay, so we are on the 13th chapter, all right, reconciliations. So there are different types of reconciliation that we will study. We have bank reconciliations to study, supplier reconciliation, and also receivables reconciliation. Clear? So every
Mm-hmm.
sorts of reconciliation. So what is a reconciliation? Reconciliation simply means that you're going to agree one balance with another balance. Understood? Okay.
Mm-hmm.
So when we do bank reconciliation, we are actually comparing. Just a moment. Okay. So when we do bank reconciliation, we are actually comparing our bank ledger book balance and also the balance that we have with our bank. Understood?
Mm-hmm.
Okay. Now, there are reasons that we prepare this for. Okay. And the reason is that for bank ledgers, everything happens at that point of time. Okay. For example, if a customer gives you check, what do? You're going to debit it, right?
Mm-hmm.
But this won't be reflected upon your bank account until you deposit that check into the bank account, right?
Yes.
So there is differences. Clear, no?
Yes.
Okay. And the three important thing to notice is that the ledger book, that is the ledger account is maintained just the opposite way as the bank, right?
Yeah.
So when we maintain cash book in our company, we follow which rule? We follow the double entry rule, right?
Mm-hmm.
Okay. But the problem is when you're going to prepare, that is when the bank prepares your accounts, okay, they actually follow the bank rules. Clear? And bank rules are just the opposite of what you study in ledger accounts. Understood?
Mm-hmm.
Okay. For example, for ledgers, what do? You debit the increase and credit the decrease, right?
Mm-hmm.
Okay. But in bank, you credit the increase and debit the decrease. Clear?
Yeah.
Sometimes you might have noticed when you withdraw cash, your message pops up, right? This much amount is debited from your bank account. Clear?
Yeah.
So,
Before it was
bank,
confusing.
yeah, yes, that is the most confusing part. But they follow the bank rule. That means the debit and credit is just the opposite for bank. Clear? Okay.
Mm-hmm.
And always there would be differences between a bank ledger account and a bank statement. Clear? So this is
Mm-hmm.
because of three reasons. The first reason is that it is because of unrecorded items. That means some items might have not recorded. And the second reason is the timing differences. Understood?
Mm-hmm.
And the third reason is the errors that are committed by the people who prepares them. Clear?
Mm-hmm.
Okay. Now, in the ledger accounts, that is in the unrecorded items, when there is an omission of items which has not been recorded, okay, how do you do it? How do you approach it? Clear? So, what are unrecorded items? These are items which are not recorded in the bank statements because we haven't actually taken that in. Clear? Okay. For
Mm-hmm.
example, you have received interest in your bank account. Clear? But you don't
Mm-hmm.
know that until you take the statement, right?
Mm-hmm.
So your cash book remains less and the bank balance remains more. Understood the logic?
Mm-hmm.
Okay. So suppose you have two things, that is the cash book and the bank statement, right?
Mm-hmm.
Okay. So what happens is that when you have an interest that is being credited to your bank, clear? Okay.
Mm-hmm.
But you don't know such an interest has existed because you haven't taken a bank statement for a while. Clear? So, what happens at that time? Your cash book balance remains low and bank balance increases, right?
Mm-hmm.
Clear? So, you haven't recorded the interest, and that is why your cash balance is less, right?
Mm-hmm.
So, this is called as unrecorded items. Clear?
Mm-hmm.
Okay. And it could be with both, that is interest received and interest paid. Okay. Or bank charges that has been debited from your bank account. That means your bank has charged you some interest, but you don't know that But when you
Mm-hmm.
took a bank statement, you came to know that such a charge has been taken. Clear?
Mm-hmm.
So you will adjust your cash book balance right away. Understood?
Mm-hmm.
Next is dishonored check. So sometimes you might have deposited a check in your bank account. Clear?
Mm-hmm.
So when the check came in, you actually entered it in your debit side of the bank. Okay. But later you came to know that the check was dishonored. Clear? So you will reverse your item. Understood?
Mm-hmm.
Clear, no? Test your
Mm-hmm.
understanding one. On which side of the cash at bank ledger account should the following unrecorded items be recorded? Okay, so they have just a moment. They have listed you a certain number of items. You need to
Sorry,
decide
can
which
you close the
happens
door? Sorry. Of
bank
course.
ledger. Clear?
Mm-hmm.
Okay, so they have given you several items. You see here.
Mm-hmm.
Just a moment. Okay, so the first item is bank charges. Clear?
You mean on bank, right? Or
Yeah.
charges debit on bank account?
Just a moment. Okay, you can see the screen, right?
Mm-hmm.
Okay. So first of all, so they have told you some items have been unrecorded. Okay, and unrecorded items would always be adjusted in cash book ledger. Clear? Okay. So we have two balances. We have cash book balance and we have balance as per bank statement. Clear?
Mm-hmm.
You can hear me, right?
Yes, yes.
Okay. So when a bank charge is debited from your bank statement balance goes low and cash book balance becomes more, right?
Yeah,
But the correct treatment is you need to bring down your cash book balance because that cash is gone from your account, right?
yeah.
So what would you do? You're going to deduct the amount. So that means it goes on the credit side. Clear?
From cash, you mean?
Yeah. Yeah. From
Mm-hmm.
cash book. Okay.
Yeah.
Ledger account. The next
Mm-hmm.
item is direct debits or standing orders from bank. So something you have approved before has actually got deducted from your bank balance. Clear? But you don't know that. Okay. But your bank balance is low and your cash book balance is again high. So you need to deduct that as well. So on the credit side. Clear?
Mm-hmm.
Okay. Next is direct credit. So someone has directly deposited money into your bank. So your bank statement goes high, but your cash book balance is still low. But you need to add it because money has reached your account. So you debit it.
Mm-hmm.
Clear?
Mm-hmm.
Okay. Next one is dishonored checks received from customers. See, when you got your checks from your customer, what you did was you took it in your cash book account, right? That is your cash book balance increased. But when you took it into your bank, the check got dishonored. That means the bank balance remains at low and your cash book balance is high. So you
Mm-hmm.
need to keep it down. Clear? So you credit it. Clear, no?
Mm-hmm.
Next is bank interest receipt. So bank has given you interest. Your bank statement balance went high, but you still don't know whether this was received for you. Okay, so your cash book balance is low, so you need to add this up. Clear? So debit.
Mm-hmm.
Understood? Understood, no?
Yeah.
So this is your answer. I'll provide the recordings later on, so you can just revise it from there. Clear?
Mm-hmm. Mm-hmm.
We'll continue. Okay. Next is bank statement adjustments, that is the timing differences. So due to some reason, bank would take some time to process things. Clear?
Mm-hmm.
But the bank ledger rule is that as soon as you get get check, you're going to record it as it is, right? So when you
Mm-hmm.
receive check from customers, you don't wait till it gets deposited, but you directly debits your bank ledger account. Clear?
Mm-hmm.
Okay. But the bank statement wouldn't be increased until you deposit that check into your bank account, right?
Mm-hmm.
So there is a timing difference. So when there is such a timing difference, what you do is you're going to adjust your bank statement. Clear, no? And there are
Mm-hmm.
two types of checks. Okay, there are two types of checks. The first type is called as outstanding unpresented checks. Clear?
Mm-hmm.
The second type is called as outstanding uncleared lodgements. Clear?
Mm-hmm.
So this is payment and this is receipt. Understood?
Uh, mm-hmm.
Clear, no? So what is outstanding or unpresented check? These mean two things. Sometimes you might have check that is being written, but you haven't actually given to your supplier, or you must have already given to your supplier the check, but the supplier has not presented into the bank. Clear? So that is called outstanding or unpresented checks. Understood?
Mm-hmm.
Okay. Now the opposite. You have received the check from your customers, okay,
But not
but you haven't
deposit.
actually taken it to the bank. Clear?
Mm-hmm.
So that is called as outstanding or uncleared lodgements. Understood?
Mm-hmm.
Okay, no? Now,
Mm-hmm.
the bank statement balance. So in this case, when there is outstanding unpresented check, when there is outstanding uncleared checks, you need to start with your bank statement and adjust its balance by adding or deducting things. Clear now?
Mm-hmm.
So you're going to deduct outstanding unpresented checks and you're going to add uncleared lodgements. Clear now?
Mm-hmm.
Understood?
Mm-hmm.
Okay. And then you will reach the balance as per cash book account. Clear?
Mm-hmm.
Understood?
Yes.
The logic is very simple. When there is outstanding unpresented check, your bank doesn't reflect it like the bank ledger does because you have already deducted from your bank ledger, but your bank statement is still high, so you're going to deduct it off. Clear?
Mm-hmm.
When there is uncleared lodgement, that means you have deposited check, the bank hasn't processed it, but your bank ledger always has already contained that amount. So you're going to add it to the bank statement in order to reach the balance of the bank ledger. Clear?
Mm-hmm.
Understood, no?
Yeah.
Okay, just a moment. Okay, so next type of errors is errors in cash at bank at ledger account. So whatever you have committed errors in your bank ledger account needs to be reversed. Understood? Hello?
Mm-hmm. Yeah,
Okay.
yeah, yeah.
Next is errors from the bank. That means the bank has recorded something in error, so you need to reverse it. Understood? No?
Mm-hmm.
Okay. Now, when the class is finished, you have to uh, write this, or you write down this performer first format. Okay.
Mm-hmm. Mm-hmm.
The answer is just simple. You will be given a balance brought forward. Okay. And you need to make adjustments into the account in order to reach the revised balance. Clear? Same way, your bank statement would also be adjusted in order to reach the bank ledger balance. Clear now?
Mm-hmm.
You take the bank statement, adjust certain things, and you reach the balance as per bank ledger. Clear?
Mm-hmm. Mm-hmm.
Understood? And that
Mm-hmm.
balance would be taken here, and then you find the balance, revised balance. Clear?
Mm-hmm.
Okay, copy this down, Elvira. To do TYU 2, all right? In preparing an entity's bank reconciliation statement, the accountant finds that the following items have caused a difference between cash at bank ledger account and bank statement balance. Clear? So when there is, so what is the requirement? Which of these items will require an entry in bank ledger account? Okay. So we have already discussed anything that goes directly from bank would need the bank statement to be adjusted, right? Okay. So in that sense, what happens? All the ones which does not have one as the option would get cancelled. Clear? So this is not there. Okay. And this is not also not there. Clear now?
So which of the items will require entry in cash?
Okay. That means any direct debit means unrecorded liability, unrecorded item. So unrecorded items would always be adjusted in cash at bank ledger. Clear? So option one is correct.
Yeah.
Next is lodgements not credited to the bank account. Okay. So lodgements when not credited, it needs to be adjusted with bank statement. We just studied that. Clear? Okay. So this is not there. That means the second one is not there. Okay. Then you have already got your answer. So any answer which has the second one mentioned would be also wrong. Clear? Understood? So the
Yeah.
answer is B. Clear? Let's see if B is also B is what it says to be. Check paid in by entity and dishonored, right? So you recorded the item, but the bank dishonored it, but you don't know the bank has dishonored. So you need to adjust your cash book ledger according to bank statement. Clear, no? So 3 is also correct. Clear? Now, fourth one, outstanding check. No, it is to be adjusted in bank statement. That's what we just discussed, right? Now, bank charge goes directly from bank. That means it's unrecorded in the bank ledger account, and any unrecorded items would be adjusted in bank ledger. So, and error by bank needs to be adjusted by bank itself. Clear? So, 1, 3, and 5 is the option. So, that means option number B. Clear? TYU 3 you don't need to do because it is a very big question. Okay? We'll do TYU 4. After this class by night, I'll be uploading the video on the YouTube and I'll give you the link. All right? You can watch it again. Understood? Is for anything that deals with ledger accounts, you have two ways of doing it. Okay? Either you can actually create a whole account like this and prepare it. Understood? That is debit and credit, and then you adjust the things, right? Or else you can do the minus and plus thing. Clear? So since cash is a debit, what increases is debited and what decreases is credited. That way it works, right? So any debits would be taken as a plus balance, any credits would be taken as a negative balance. Clear? That way you can also do. Okay. So it would spare time in, taking the T account. Clear? So both ways you can do. We'll do both ways. Understood? So the first way we are going to do it by ledger. All right. So this is the balance that has been given to you. Clear? And we clearly know this is the wrong balance and the details are given below. Clear? No? Okay, so let's see. All receipts are banked and all payments are made by check. Okay, so upon investigation, you have discovered that a bank charge of 136 entered on the bank balance, bank statement had not been entered in the cash at bank ledger account. So you know this is an unrecorded liability or unrecorded item. So you need to adjust the bank ledger. Clear? So first of all, what you do is whatever they have prepared, you're going to take that balance. That is carried forward balance. Clear? Now, carried forward balance, when it is brought forward, what happens? It goes on the credit side, right? So brought forward is taken on the credit side, 554. Clear? Always and always you can start with the brought forward balance. Understood, Elvira?
Mm-hmm.
So the brought forward balance of balance carried forward is the opposite side. So on the credit side, clear?
Mm-hmm.
So you have taken down the 554. Now you're going to take the adjustments. Understood?
Mm-hmm.
So bank charges is something that happened in the bank statement. So that means your bank statement balance goes down because of a debit or because of a bank charge by the bank. Clear? But your cash
Mm-hmm.
book balance is still high. So you need to bring it down. So you have credited bank charges. Understood?
Mm-hmm.
Okay, next one. Check drawn amounting to 267 had not been presented to the bank for payment. So the bank, we have discussed, right? Any outstanding balance would be adjusted in the bank statement account. Clear?
Mm-hmm.
But the problem here is you don't know how much the bank statement account is. Balance as per bank, you don't know. Clear? So that is
Mm-hmm.
a blank. Understood?
Mm-hmm.
Clear, no?
Mm-hmm.
Understood? And the check
Yes.
which has not been presented needs to be deducted from bank because you have already adjusted in bank ledger account. Clear?
Mm-hmm.
So you have deducted that from bank statement. Clear, no? Because it is rightfully to be deducted, right? Bank is taking some amount of time. No problem. We are going to deduct it in our reconciliation statement. Clear?
Mm-hmm.
Okay. Third adjustment. The accounting entries for a check is of 22, right?
Mm-hmm.
Okay. Had been reversed and accounted for as received in cash book ledger, right? Accounted instead of as a payment. So it was taken as a payment, okay, right?
Mm-hmm.
See, it is a payment, right? When you pay check, what happens? Your balance goes, right?
Mm-hmm.
Okay.
Right.
But what happened? They have taken it as a receipt, right?
Mm.
22, they got in excess in debit side. Clear?
It should be a credit.
Yeah, but the problem is if you credit just 22, it becomes tallied, it becomes zero.
You
Clear?
need two
So you need
times.
to double the amount. Understood?
Mm-hmm.
Always double the amount if the error is on the wrong side of the account. Clear?
Mm-hmm.
Note it down somewhere. Always the amount should be doubled if it is on the wrong side of the account, ledger account. Clear, no?
Mm-hmm.
Okay, so you have adjusted that as well. The last one, a check drawn for 6 had been incorrectly entered in the cash book ledger as 66. So error in the cash book account needs to be adjusted in the cash book itself. So what happened? They have deducted 66. That means the credit side they have shown 66, but it should be 6, right?
Mm-hmm.
So it's 60 extra they have deducted. So you're going to add 60 extra to the debit side in order to adjust it. Clear?
Mm-hmm.
Okay. And then you're going to take the revised balance. Understood?
Mm-hmm.
Now, the golden tip of the year or tip of the hour. Where is the revised balance on? On the cash, on the credit side, right? On the, sorry, on the debit side, carried forward, right?
Mm-hmm.
So when it becomes brought forward, what happens? It's a credit balance. That means it's an overdraft. Understood?
Mm-hmm.
Understood, no logic? So the balance as per bank ledger becomes minus 674. Clear, no?
Mm-hmm.
So what happens in order to reach minus 674? What do you need? You need 400 and something extra, right? So that is equal to minus of 674 minus 267 in order to reach that amount. So minus 407. Clear, no?
Mm-hmm.
So minus 407 is the overdraft because it is a minus balance. Now, instead of a ledger, how can you do this? The brought forward, since it is on the credit side, would be taken as a negative balance. Clear now?
Mm-hmm.
Okay. Now the second one, 267, the same way we have adjusted here, right? The third
Mm-hmm.
one, 22 has been deducted extra, right?
Mm-hmm.
Sorry, 22 has been taken as a receipt, but extra amount. So 44 it needs to be deducted, minus 44. Clear?
Mm-hmm.
Okay. Now, just a moment. Just a moment.
And
And adjust it in the, this is just the format that we have studied just now. That is this format. Clear?
mm-hmm.
See, this is the format.
Mm-hmm.
Okay.
Mm-hmm.
So you need to adjust the bank ledger and find the revised balance. Then you take the revised balance here, and then you find the bank balance, balance as per bank. Clear?
Uh-huh.
Understood? No?
Yeah.
Okay. So for the official purpose, you will study it like this. That is the ledger rule. Okay. But for the exam, you just need this negative and positives. Clear?
Mm-hmm.
Okay.
Yes.
Now, supplier statement reconciliation. So see, when you buy goods on credit, what happens is that you have a set of amount that is being prepared by your company, right?
Mm-hmm.
And the supplier would have a different balance from us, right?
Mm-hmm.
And the supplier, what do? They on a monthly basis, they would send you the amount that is due from your part, right? From your company, right?
Mm-hmm.
And that statement which the supplier gives you in order to remind you for the payment, it is called as a supplier statement. You are in this field, so you know, right?
Mm-hmm. Yeah.
Okay. So that is when you reconcile your balance and the supplier balance, and when you produce a statement on that, it is called as a supplier statement reconciliation. Understood?
Mm-hmm.
Okay. Same way we have receivable reconciliation too.
Mm-hmm.
Okay. Clear now?
Yes.
So this is the typical example of how a statement is, right?
Mm-hmm.
Since you are working in this field, you already know how it looks, right?
Yeah.
Okay. So this is the statement that the supplier would give you. Okay. And this would be the account that they have prepared. Now you're going to compare this, what they have given to you, with the amounts that you have prepared. And then you're going to find the differences and talk to them, right?
Yeah.
Clear, no?
Yeah.
Okay. Now, TYU 6. TYU 5 is simple. What could be a possible reason for difference between the two documents, right? So they have given you, this is BDC company where they have
Mm-hmm.
been given a statement from SWY company, that is their supplier, right?
Uh-huh.
So according to their supplier, we have to give them 620, right?
Mm-hmm.
But according to us, we only need to give 414. Understood?
Yeah.
Okay. So the question,
Mm-hmm.
the requirement is, what is the possibility that these differences have arisen, right?
Mm.
Understood?
Mm-hmm.
So there is an arithmetic error in the statement prepared by SWY company. That is their problem. They need to adjust it, right?
Mm-hmm.
SW company prepared committed some mistakes means they need to adjust, right?
Mm-hmm.
Okay.
Yeah.
Now the second one, VDC company has taken credit for goods returned, but this has not yet been recorded by SWY company. That is also their problem. They haven't recorded, right?
Mm-hmm.
Okay, there is a credit for goods returned, but we have recorded it correctly. SWY company has not recorded it, right? So that is their problem.
Mm-hmm.
Understood? Next
Mm-hmm.
one, an invoice from SWY company has not been recorded by BDC company. So our company did not record this. That is our problem. Understood? So this is the
Mm-hmm.
likelihood of the mistake. Clear, no?
Mm-hmm.
The DS BDC company made a payment. Okay, made a payment to SW company of 206.72. So that is also their problem. We have recorded everything correctly, but they haven't recorded the payment that is being sent to them, right? So that is their
Mm-hmm.
problem.
Mm-hmm.
Only the option that we are going to adjust our account is option C. Okay,
Mm-hmm. Mm-hmm.
understood now?
Yeah.
Now the next one, test your understanding 6. Okay,
Mm-hmm.
Jack's company received a statement of account from a supplier showing a balance of how much? 777. Okay.
Mm-hmm.
Jack's company's payable account balance for that supplier shows 852 as a balance, right?
Mm-hmm.
So this is supplier statement balance. This is payables ledger balance. Understood?
Mm-hmm.
So they are asking what could be a possible reason for the difference for the two balance differences, right?
Mm-hmm.
What has caused the difference in the balance? Understood? We'll
Mm-hmm.
read everything line by line and then we will decide. The supplier has allowed a discount of 75, which Jat's company has not recorded. Okay, first one. Second
Mm-hmm.
one, Jat's company made the payment 75, but it was not recorded by the supplier. Third one, Jat's company returned goods to the supplier, okay, as a credit note, but he may not have recorded. Fourth one, the supplier has issued invoice, but Jat's company has not received it, right?
Mm-hmm.
Okay. So what hasn't been received, you need not record it. So D is not correct. Okay. If we receive it and then we did not record it, that is wrong. Clear.
Mm-hmm.
Okay. Now C is that Jat's company returned the goods to supplier. Okay. And they haven't recorded. That is their problem, right? So this is
Mm-hmm.
also not it. B, Jat's company made a payment, but the supplier has not recorded it. That is also their problem. We need not adjust ours, right? A is a problem because supplier has given us a discount, but we have not adjusted those payments to our account, right? So we need to bring down the balance, that is 852 from the 852 we would deduct 75. Clear, no?
Mm-hmm.
Understood? So A is the answer. Okay, Elvira?
Mm-hmm.
Okay. So the